Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the middle of the month here, September 15 in 2022. We have another down day in the market, with the S&P closing at its lowest level in the last couple of months. That is pushing it down to the 3900 level, and that is right beneath Don's 3931 and 3911. So what is the play? What are we looking for throughout Friday? And the main part of this video, we'll see this as it gets closer, but as the Fed funds rate and the Fed meeting takes place next Wednesday. So let's get started. In the S&P 500, we saw the market fall about another 1.5%, but the leading edge of the sell side activity continues to be weak stocks getting weaker, and that's in the NASDAQ. And beneath that, the Russell was down. That's our small cap index. It's down about 1%. And the 30 stocks in the Dow, down about 0.8, almost 1%. So we still have what we call relative weakness, or you might want to say leadership, to the downside in the technology names. Looking quickly at the monsters of tech, that's going to be Meta, which is Facebook, Apple, Microsoft, Google, and Amazon. And that's our symbol here in TheoTrade. They're not that far from new lows. That's the main idea that we're pushing and have been looking at in the last few weeks. That the stock market, this is of course these stocks, but they're on the leading edge of the sell side activity. They continue to make new lows, and although that was a big rally up into August here, it resulted in another big decline that at this point is not hard to see how these indices, or at least how these stocks, make a new low. Notwithstanding the NASDAQ potentially making its new low for 2022, not far under that is the S&P. That's your S&P futures. Again, 3900 is a similar stopping point as what we saw a little bit earlier in the year. So I keep comparing the big picture or the big market to what we saw into April, which was a downtrend. That's lower lows, lower highs, lower lows, lower highs. A really good rally up to 4,600 in the S&P futures. And then the thought process was, that's it, it's over, we're going to make new highs on the year. No, the market has a better shot to go off and make new lows on the year. And that is what occurred. So that's what we're looking at in the potential future going forward through August into September, and September into October, toward the end of the year, which isn't that far away. So that's what we're framing on the big picture. On the Russell, that's our small cap index. That's about 1800, and not dissimilar to what the picture looked like. We'll take it back here. What the picture looked like, again, going from April into May with a small stopping point on the way to new lows. That is what the update from the prior videos, for me at least, talking about the risk of upside continuity or continuation of the upside for price against the reward of a sell side swing. We are now seeing that reward take place. Crude oil in today's session also was down. It was down about 4%. So we're watching all of these in concert, and of course any trades, be they swing or duration or premium sold or option vertical spreads or other positions in the portfolios. So crude is and remains in a little short term but multi-month downtrend as well. So its prices are now stabilizing around the 85 and 80 per barrel level, but these are focal points like the equity market, not much support beneath those levels. Gold, which is a little interesting I think to me and other traders, because if the narrative is inflation, why is gold not at these levels? And clearly it is not. In fact, one of the big headlines you might see in the financial media or the financial news, if you watch in other sources tonight, is that gold made new 52-week lows. And that is under the 1,700 per ounce, which has been a long-term, multi-month, even might say a multi-year support level. So these are the price levels, and again, potential for additional lower prices beneath these support levels. What else has our attention is the bond market. And I will trade TLT or watch TLT as opposed to the ZN, which is something you might trade, or ZB. So these continue to make downtrend new lows. Again, lower lows, lower highs, lower lows, lower highs. A strong, dramatic swing up, just like we saw at the beginning of the year. And that did also result in new lows coming. And they have printed. But on the exact flip side, that's what we'll be going into next week, is the Treasury yield. I like to chart the 10-year U.S. Treasury note yield. And here in Thinkorswim, we like to use TNX. Now 35 or 34.6 does not mean 34%. It does mean actually 3.4. So we just move that decimal space one to the left. That would be 2% on the 10-year Treasury note yield. That would be 3%. And the Treasury note yield, as the Federal Reserve, continues to raise their interest rates, that 10-year yield is going above and making just about a fresh new 52-week high or multi-month high, alongside the equity market making potential lows, and of course the bond market, which is the exact opposite of that. We'll take a look again at ZN. That's making off new lows. So the bond market is at the moment more correlated with the equity market, which is again making those lows. We will have the Federal Reserve next Wednesday, so we will be covering that in evening videos and, of course, daily commentaries and daily broadcast as we get ready for that move. But a little sneak peek. Here is our Fed watch tool at the CME Group. We bring this up in TheoTrade from time to time, and it just shows, in terms of what the market, Fed funds rate, or the target rate probabilities, 80% of participants are betting on that would result in about a 0.75 basis point hike. 80% chance, that's probably what happens, but there is a real possibility. 20%, but a possibility. And if that number starts to rise, that would be the bound of a 1% hike or jump or boost in the Fed funds rate. One would not think that would have a bullish outcome on the equity market. If the Fed shifts to a much more aggressive, and again, CPI is one of our leading things last week or this week, and that big down day was attributed to CPI. Why? Because inflation is not getting under control, and the Fed probably will have to be more aggressive. And more aggressive means potentially raising it 1% or 100 basis points. Not quite in the forecast, but it is a possibility, and we'll be watching this number closely in the week ahead. Nonetheless, inflation does remain a concern, and our themes continue to play out on the big picture. As inflation is a wider concern, it does put pressure on the Fed to raise rates, and as rates go up, here are the 10-year Treasury notes. Of course, the yield curve inversion across the 2 and the 30-year and other yield products. But as this goes higher, it pulls money, and it hurts consumers, it hurts businesses, because they are taking out loans at higher rates. So that is not necessarily a good bullish sign, and that is part of the equation. And the effects that consumers will have with their debt as their debts, or as the yield to finance those debts, go up. That could continue to have additional pressure to the downside in the equity market, additional upside pressure in the yield, and potential downside pressure in the bond market. But all of this will be a little clearer as we go through Monday and Tuesday before the official announcement and before the official Fed funds rate is raised. But will it be raised 0.75, 75 basis points, or will it be raised a whole percent higher? That will be on the table. But until we get there, continue watching these markets, and as the downtrend continues, as lower prices are going, a quick note about which stocks are making new 52-week lows. We keep watching these because they continue to be stocks on the downside, and some of them are leadership, which are or include Meta, Nvidia, Verizon, Adobe, Intel, AT&T, Charter, and the others. To finish the video, just a quick look. Here is our weekly chart. Here is the daily chart. And this is, again, updates from prior videos. Weak stocks tend to get weaker, and that favors the short side on pullbacks. There is Facebook. There is Nvidia. There is Verizon. Adobe, which just had its earnings, and Adobe had a 17% decline. It continued to new lows. That's Adobe. And then AT&T. And finally, Intel, which continues to trade to the downside. As always, be careful and safe in this environment and all others, but this is definitely a fast-moving environment. Protect yourself, have your hedges, be careful and safe. And this is Corey Rosenlund with tonight's Theo video update for September 15th, 2022.